So welcome everybody to the Texas REIAs. The Texas REIAs is the largest network of real estate investor associations in the great state of Texas, with over 150,000 members, participants, and attendees going back to 2003. Texas REIAs provides all kinds of resources for real estate investors, including market updates. So we're going to do a very quick market update, and we're going to tell you what's going on in the market right now. Okay, so if I were to give you one data point, well, I'll give you more than one data point, but this slide here is kind of a very quick overview of what's going on in the market right now. The average price house here in the state of Texas, $427,000, up 3%, not much, from 1 year ago. Median price in Texas, $340,000, up 1% from 1 year ago. But if you wanted to just look at one number, just one number, that kind of gives you a summary of what's going on in the marketplace, it would be this number right here, months of inventory. That's the critical number. Months of that's the pulse and the health of the market. So what is months of inventory? If you took all the houses for sale in the MLS and you stopped adding more, we're not going to add any more houses for sale. We're going to just take what we got and we're going to sell them until we're done, until we're out of houses, until the shelves are empty. How long would that last? And the answer, 4.8 months. Now that's also the average amount of time to sell one house. Now average, I mean, some houses take a lot longer, some houses are a lot faster. There's got to be an average. The average is 4.8 months. Now let me put that into perspective. The saying is, if there's less than 6 months of inventory, you're in a seller's market. If there's more than 6 months of inventory, you're in a buyer's market. If there's right around 6 months of inventory, you're in a neutral market. We're in a seller's market. Okay. Now, a year ago, we had 3.6 months of inventory. That would be a hot seller's market. Now we're in a lukewarm seller's market. But we never went to a buyer's market. Why not? Well, what's happened over the last couple of years? Interest rates went up, right? And how did that affect things? Well, let's look at the history. 2021 prices went up 18% in 1 year. 2022 prices went up 10.7% in 1 year. In 2023, flat. 2024, flat, until at the very end of the year, went up a little bit. Why did it go up a little bit? Because at the end of the year, interest rates came down a little bit. Not a lot, a little. But what about interest rates? That's the biggest news in real estate. Interest rates went up. Okay, when interest rates get up, houses are less expensive, right? So the number of people that can afford them goes down, supply and demand, right? So normally that would push prices down, but there's an offset. What's the offset? Normally, 2/3 of houses that are sold are new construction, are resale, and 1/3 are new construction. Right now it's inverted. Why is it inverted? How come people are not selling their house? Oh, there's plenty of houses to buy. The reason they're not selling their house is because they got one of those 3% mortgages and they don't want to lose it. They get a new 6.5% or 7% mortgage. So people should be selling their house, but they're not. So yeah, there's less demand, but there's also less supply, okay? And when you have less demand and you have less supply, what happens to prices? They go flat. So that's why we never had a correction. The correction, that was the correction. It just went flat. So very quickly, the market drivers, the economy is doing okay. We have good unemployment, good growth here in Texas. Interest rates are higher. They're normal now by historical standards, but they're higher, so the affordability is a little lower. House price trajectory is flat. So like red is pushing down, green is pushing up, yellow is pushing sideways. Supply, we don't have enough inventory. We're in a housing shortage. Did you know that? We have 6 million fewer houses than we need nationally. So that's a problem. We're not building enough houses. That's a problem. And we have a problem with construction. What is that? General contractors are not getting replaced. The average general contractor is 58 years old. and they're just getting older and they're not getting replaced. So you got a teenager, here's some advice. Don't send them to college, buy them a hammer, okay? Seriously. I know plumbers right now that are pulling down $1 million. I don't know any college grads that are pulling down $1 million. You can get $1 million as a plumber, or you can get 4 years, a bunch of college debt, going to work for some jerk that'll pay you a fraction of that and tell you when and when not you can take your vacation. Like I said, buy your kid a hammer. And then finally, housing demand. Closed sales trajectory flat, pending sales trajectory flat. But this should be the biggest bullet on the page. And this is what saves Texas. Migration. What is that? The ratio of people moving in versus people moving out. Last year, California lost 500,000 people. Last year, Texas gained 500,000 people. Where do you think they went? And they all need a place to live, either a house or an apartment. And we don't have enough houses, and we don't have enough apartments, and that's why our demand exceeds our supply. So even though interest rates went up, right, prices did not go down, right? They just kind of flattened out because of all of the migration, and that's what saves Texas. So the forecast, very quickly, we do forecasts. This comes from the Texas A&M School of Real Estate. It's not from me, but it's always been accurate. That was it. If you were looking for some great market bottom, that was probably as bottom as you're going to get. Interest rates should decrease a little bit this year. That's what all the experts are saying. But that shouldn't do much. We expect prices will probably be up about 2% this year, not much. We expect sales to be up about 2%, not much. But that was a very, very quick market update.